Hello traders, welcome to Learn Forex. Today we have another price action setup, that is sandwich trading setup. Sandwich trading setup is more effective with the all other setup that is described in our channel. There are some other trade patterns sort of similar to this, but we found that the sandwich trading setup is much reliable and also profitable. Okay, let's get into the details. The sandwich trading is made up of multiple candles and involve an engulfing bar. It forms by the market going up or down sharply, then having multiple small bars follow it. Then after those small bars, a bigger bar engulfs the previous small bars. This essentially forms a sandwich, and you will get a better trade idea of what it looks like as the video goes on. In this picture on the left side, you will see a sandwich trading pattern. First of all, price goes up sharply. Second, create some small bars and then make an engulfing bar with the small bars and price will go down. This is a sandwich trade setup. Sandwich trading setup can be traded with continuation pattern and also a reversal pattern. This is a sandwich pattern in the real chart. First of all, there is a big move bar, then create some small bar and finally engulf this small bar and market goes to the up. So what are the characteristics of sandwich trading? First of all, it should be on strong support or resistance, or at least a minor support or resistance level. The big move bar has to be bigger than the previous candle and to be considered a big move. The bodies of the small bar cannot be bigger than half of the big move bar. The smaller, the better. The small bar's wicks doesn't matter. The smaller, the better. The engulfing bar must consume all the small bars. At least one small bar between the big move bar and the engulfing bar is required. The more small bars there are, much better. As I mentioned earlier, that the sandwich trading setup can be taken by two types. One is continuation pattern and other is reversal pattern. This chart is a good example of a continuation setup. The reason is that is a continuation pattern because it is an uptrend creating higher lows. The sandwich setup gives a way to enter the trend with the pullback. First of all, breaking the minor support zone, then create some small bars and finally engulfing these small bars with this candle and price goes up. So this is a good continuation pattern with the sandwich trade setup. This is a USD CHF with H4 time frame. Finally, check out the reversal pattern. This chart shows you the sandwich trade setup acting as a reversal pattern. After market pulling back to the support or resistance zone, market tries to break this support level but cannot and make some small bars, and finally engulfing the small bars, market change the direction of the trend. So this is a good example of a reversal setup. On a sandwich trade setup, where should we put entry and stop loss? We should consider this engulf bar. We may take entry after the close of the engulf bar and put a stop loss 5 to 10 pips above the engulf bar. Our take profit will be the next support or resistance level. Finally, in a nutshell, the sandwich trade setup is a very solid trading platform to trade in the market. This setup doesn't happen as much as other trading setup such as the pin bar or the engulfing bar, but when it does form, it is a very powerful setup. So we hope that this video about price action sandwich trade setup can make us a good trader and a careful market seeker to take entry in the forex market. Finally, if you have any difficulties to learn about any kinds of trade setup, you may comment below this video, and please don't forget to subscribe us. Thank you.